Netflix set to report third quarter earnings next week. Let's bring in Michael Pachter from Wedbush Securities. He has an underperform rating and a $342 price target on the stock. Great to have you on, Michael. I mean, what's the core reason for why you have an underperform on this?
You know, I just think it's overvalued. It's not. They're definitely a very solid business. They have a massive and sustainable first mover advantage. So I don't see the subscriber count declining, and I don't see them, doing anything bad. But the stock's trading at about 9 times revenue. My target's about 5 times revenue. So I'm not saying it's worthless. I'm saying it's overvalued because I think investors look at these guys like they're going to dominate. Everybody on the planet's going to cut the cord and stop watching cable TV and start streaming everything. And that's just not going to happen as long as you're on the air.
I think also great to see someone stick their neck out as you have in terms of a 342 price target rather than just slightly below. When could that start to pull back? Is it this quarter? Is it a year ahead? And which numbers do you focus on most of all coming into this quarter?
I think that the only number that really matters is free cash flow. And, my target gives them credit for breaking even this year and then starting to deliver positive free cash flow. We'll see if that happens. And then I have it growing by about $1 billion a year for the next 10 years. I discount back at a U.S. Treasury 10-year rate, so really low. And then I apply a 5% free cash flow yield. Both of those things are crazy. And so I'm stretching to get to 342. If they grow cash flow faster than $1 billion a year, then the stock's worth more. I just don't see it. I don't see their content costs ever coming down. The competition I talk about isn't just for eyeballs. It's for creative. And to be honest, I think the biggest news that nobody's reporting is this strike, this IATSE strike, the stage and theater workers. They're the guys who are everybody but the creatives who make Netflix content. Netflix's scale is significantly lower than TV scale. The reason for this strike is the streamers aren't paying them enough. So I actually think Netflix is going to see their costs go up a lot, even if there is an accommodation. And I think the street is completely missing that.
That's pretty interesting, especially because that is set to happen imminently. Michael, so how long have you been out of consensus and way below the price on Netflix? Because it does seem, like it's a runaway train, whether it's the subs, whether it's just a hit show like Squid Games that just takes it to these astronomical levels.
Yeah, Sarah, great question. And I have to admit, I have been consistently wrong forever. I downgraded in 2012. And I was convinced that Disney was going to compete and that they were going to pull all their content, and I was about 7 years too early. So admittedly, I thought you'd get competitive streaming services a lot earlier. Everybody pulled the content. That happened 2019 and 2020, and COVID kind of masked the effect because obviously we were shut at home and we were watching a lot more streaming content. I think that starts to materialize in the next year or so. And I think what happens is Netflix sees significantly slowing growth, because they've already penetrated all the above median income households in the West, and their growth is going to be low quality, Southern Asia, so India kind of growth at very low ARPU. So I think you're going to see ARPU stall. I think you're going to see subscriber growth robust but low quality, and I think you're going to see content costs continue to rise.
What about pricing power here in the U.S.? Have they not still got a few levers they could pull there?
They do, but they're charging 14. HBO's charging 15. Disney's charging somewhere between 7 and 10, depending on when you sign up. It's going to be really hard when they're being compared to those other plans. Yes, you and I will pay 20 because we're consuming enough Netflix to justify it. But I think that's where people start to cut the cord and start to cut their streaming subscription and start to flip around when it gets to be a little too expensive. I actually think 15 is
maybe I wouldn't pay 20.
I would pay 20, but I pay for everything. So I pay for my Peloton subscription. I haven't been on it in 6 months.